I'm Ernie Humphrey, the CEO and COO of Treasury Careers. I'd like to welcome everyone to our webinar today, AR Best Practices, 5 Steps to Strategic Customer AP Relation and Lower DSO. I would like to thank our webinar partner, HighRadius, whose strong commitment to thought leadership helps us make this webinar possible. While the speed of credit-to-cash cycle heavily depends on terms dictated by a customer, low-hanging fruit is the broken information exchange mechanism between accounts receivable and accounts payable teams, which has traditionally been viewed as a transactional process. From exchange of invoices, collaborating over payment terms and early pay discounts, acquiring accurate remittance information, and providing convenient payment options, AR KPIs are heavily impacted due to largely manual, time-consuming collaboration and communication. Today, you will discover how companies are leveraging technology to reduce receivables processing costs by driving electronic invoicing and payment adoption with small and medium businesses, maximizing top-line growth by virtually eliminating blocked orders and credit hold, using real-time collaboration with customer AP teams, improving the customer experience with transparent and quick resolution of credit issues, customer claims, disputes and deductions, and reducing AP payment process lead times by eliminating remittance information issues. Before I delve into the content, I'm going to offer a few quick words about Treasury Careers, cover a few housekeeping items, and introduce our featured speaker. Treasury Careers offers content and resources that empower Treasury professionals to own their career success. We have a plethora of Treasury job opportunities listed, a great amount of Treasury certification resources, complimentary webinars like this one now, and so much more. Now on to our exciting housekeeping items. The slides are currently available under the handouts area in your GoToWebinar control panel. We'll send you links via email to the presentation and the recording over the next 24 hours. We'd like to hear from you. We can take your questions at any time in the questions area of your GoToWebinar control panel. Finally, we appreciate your consideration in taking a short survey at the end of the webinar today, as we always strive to deliver on the ROI we offer our event attendees for their valuable time. In terms of the promises I outlined in the webinar introduction, I'm thrilled to have Kieran Rana, Director of Solution Engineering, HighRadius, to assist me in this endeavor. Kieran works with customers across different industries to solve complex AR problems. He is also involved in performing upstream assessments and diagnostics on AR processes and teams and recommends modernizations. He is dedicated to educating industry practitioners about business challenges and the benefits and value-added solutions available by adopting the latest in technological advances. A bit on our agenda today. I will start out by reviewing some accounts receivable pain points, and I will go through the theory in terms of the 5 steps to improve supplier relationships and lower DSO. Then Kieran will actually show us theory to practice and show us how this is actually done in terms of leveraging technology to improve supplier relationships and lower DSO. In doing so, he will show us how leveraging automation can cure AP headaches and help you develop strategic relationships with your suppliers. We'll also review some other strategic outcomes of AR automation, offer you a credit management checklist, and some additional resources. So in terms of our accounts receivable pain points, these are very recognizable to most of you. So those of you who might be in Treasury or CFOs, these might not be as familiar to you. So these are things you definitely want to touch base on with your AR team. Of course, number one is our delinquent invoices. Gives us suboptimal working capital optimization. Another big pain point is just the inefficient invoice exchange, about how we are exchanging information with our customers. So we'll see a lot of these pain points are aligned, but what inefficient invoice exchange really does is it creates an asymmetry of information, and this can cause a lot of issues in terms of misalignment on invoice terms. It can cause invalid customer claims and disputes. It can cause ineligible discounts to be taken. So it's very, very valuable in terms of automation in order to level the playing field in terms of the information that is available to both sides of the party. So you're looking at the same information and there's no disconnect on what is owed and when it's owed. And then also, of course, another pain point from the AR side, which I felt very heavily in Treasury, is the inaccurate remittance information. But now we'll talk about how how there's solutions now that allow us to mitigate that in terms of our suppliers getting those on EIPP solutions. So again, some of those accounts receivable pain points. So we'll talk about how some of our 5 steps for strategic customer AP relations and lower DSO can help us eliminate those AR pain points. Some more pain points, just to put some numbers behind this. A study by E&I estimates the top 1,000 U.S. companies could save more than 35% of $375 billion tied up in working capital through faster conversion of receivables. And then what we'll talk about today, one of the ways that we can really do this is by partnering with the AP teams at our customers. So really forming those strategic relationships is really going to help us untie that working capital. And then as we noted before, the speed of the credit cash is dependent on terms dictated by the customer. Again, that low-hanging fruit is that exchange mechanism between our AR team and AP teams, which has been viewed as a transactional process. We want to develop mutually beneficial relationships, and we can see as we educate our customers that there are ways to improve processes and practices on both sides. And so from exchange of invoices, collaborating over payment terms, early payment discounts, and providing convenient payment options, again, AR KPIs are heavily impacted due to largely manual, time-consuming collaboration and communication issues. So as we're able to collaborate with our customers and reduce the amount of manual process, the collaboration barriers and the communication barriers, we are going to be able to lower our DSO and our processing costs, and also offer benefits to our customers as well. So in terms of the 5 steps to improving customer relationships in DSO, we'll go through these in more detail. One is reducing costs through e-billing, and that is a benefit on both sides, not only from our side, but in terms of our customers as well. So through the electronic exchange of information, including the electronic exchange of remittance information, there's benefits to both sides. It reduces our processing costs, but also reduces the AP processing costs for our customers as well. And this also really eliminates a lot of issues, manual issues, things that are going out of workflow, time spent on the phone. It's amazing how much time is spent on the phone in terms of our AR team and their AP teams a lot of times, which could be eliminated if we all had access to the same information and if we were able to more efficiently exchange information. We'd want to consider offering access to payment options to our customers. So that can be a tremendous benefit to our customers, but also to us. So we no longer need to be in the business of accepting checks. Our customers expect to be able to pay us in other ways, but the good side of that for us is that receiving electronic payments can actually be much more efficient on our side, and we can control those payments when they're coming in. Gives us opportunities to also negotiate dynamic discounts as well. So it's very beneficial to allow access to payment options to our customers, and that helps us facilitate that strategic relationships with our customers. And then we talked about this. We'd love to have technology that facilitates real-time collaboration with customer accounts payable teams. A lot of the pain points that we talked about earlier are just caused by collaboration barriers, misinformation, asymmetry of information. So if we're able to communicate in real time, collaborate, any potential issues that we may have, we may be able to stop issues before they happen. And so it just allows us to be proactive in terms of our relationships with our customer and get issues resolved with fewer phone calls, if any. And then we can also improve the customer experience. And again, improving the customer experience has a lot to do with that visibility in terms of if there are issues, if there might be discount issues, how do we escalate those issues? How do we make sure that they're taken care of? How do we make sure that our customers, that on the AR side, our customers are having a great experience? Having a great experience means that our customers are going to want to pay us as quickly as possible, improve our working capital optimization, and then using technology to receive the right remittance information absolutely helps us on our end reduce our DSO, and there are solutions out there that absolutely, including supplier portals, that allow our customers to push that remittance information back to us in a format that we can have effective cash application. So again, all these 5 things, we do these things, collaborate with our partners, are going to improve our relationships with our customers, but also improve our DSO as well. So in terms of the e-billing, EIPP I mentioned earlier, electronic invoice presentment and payment. It enables worldwide businesses to exchange documents, invoices, purchase orders, credit notes electronically rather on paper. So that just gives us the ability to communicate effectively, and it really mitigates a lot of issues. Users have one view of all payable and receivable transaction online, quickly query, and on the accounts payable side of our customers, they can approve, manage, and pay for the transactions with the click of a mouse. So at the end of the day, we are making it easier for our customers to pay us, so we can show them the great benefits, help educate them, and then some of the things that often hold up payables on their side, such as and maybe issues with purchase orders, and maybe we can have some credit note issues. Having that visibility and that view and that ability to collaborate in real time is really going to take away a lot of those issues. So e-billing is definitely a way that we can collaborate with our customers. Again, more about EIPP allows companies to process invoices from our suppliers electronically, handle payments on the back end. So from our customers' perspective, it does away with a lot of the manual paper-based processing, and there's also a large cost on their side in terms of check. Mentioned this before, issues that hold things up on the AP side, PO, non-PO based spending. It allows buyers to check the accuracy of the invoices that are coming from our side. So one of the good things about EIPP on our side is it helps us do a better job. What we want to do is get the information to our customers in a timely manner and make it as easy to pay as possible. So it's ideal for adoption by SMBs. The hurdle in terms of the economics ROI is pretty small, and it readily integrates with any ERP without disrupting the existing system. So again, it's a great benefit on both sides of the equation. And then we talked about this a little earlier. Another way to build that relationship and improve efficiency on your side is to maybe offer different payment options, and sometimes your customers expect these options as well. Of course, on their side, their customers have to have the ability to process, to pay things in an efficient manner, turn around those invoices that they get. You can offer discounts. We can look at dynamic discounts. You can look at making it mutually beneficial to accept credit cards in terms of the return on the capital, and then you can also make things a little easier on your side. You can look at making it more efficient in terms of the size and complexity of your invoices. I was on a webinar the other day, so there's a very high percentage of invoices that are repeat for your customers. So you want to make sure you have the technology to make sure those customers are bundled effectively in terms of the companies by the subsidiaries and everything. And then you may also have the ability to offer a customer-specific template. Again, something that's going to make it easy for your customers to pay you in a timely manner. So that's a way to help build that collaborative relationships. And then we talked about just 2 things, on the technology and process time, just real-time collaboration. It just leads to positive results. And these are some of the things you might want to consider. Monthly review of account status by buyers, discussion of resolution of disputed invoices. So you want to get at the root causes of the disputed invoices. Is it something coming from our side on the AR side? Is it the structure of our invoices? Is it the invoice term? So let's have a collaborative discussion on that. You want to proactively avert blocked ordered by frequently reviewing credit utilization limits. So you want to start to look at those limits. Are they coming up on those limits? May it make sense for you to raise those limits? Or is there any possibility that blocked orders that shouldn't be blocked are affecting those limits? Is our cash application timing affecting those limits? So what are things that might cause us to bump up against those limits, and should we raise it? and also do we need to improve the efficiency of our cash application. And then again, that visibility can be accommodated through the use of EI, PP, and customer portals. So in terms of just improving the customer experience, just absolutely critical. So you want to have that visibility in terms of that technology. A lot of the technologies out there have the ability, this chat feature, you can see the interaction with the customers. So you definitely want to raise claim to a disputed invoice, be proactive. In terms of what is getting out the door, you want to make sure that you're proactively checking the accuracy of invoices, validating those payment terms. Again, anything that gets out the door, there could be some accountability from your side in terms of getting your customer paid. You're going to want to look for trends. Are our customers paying in a consistent manner? Are they starting to slow down? Are they getting up against terms? What can we do to get our customers to pay faster? Make it easy, make it easier for them to pay. Speaking of making it easier for them to pay, enabling access to shipping documentation can also help with that customer experience. Again, you want to make sure that there's disputed invoices. Let's be proactive. Let's be positive. Let's look at the root cause. And then it's also great to have a easier exchange of those credit notes, isn't it? Credit notes. And then we talked about this, the remittance information is beneficial on both sides. Technology now allows remittance information to be captured directly when payment is made by buyers, helps us tremendously on our side, on the cash application side. So it's a lower cost benefit to our customers, but it's also a benefit to us as well on the AR processing side. So talked about these things in theory. So with that, I'm going to go ahead and hand the floor over to Kiran, who's going to take us through actually how these things are being done.
Thank you, Ernie. Thank you so much. Hello, everybody. I'm Kiran Rana. As Ernie pointed out, I'm going to talk about automation. So the way I've structured the discussion today is I'm going to cover most of the processes and talk about how some of these processes work today, and also talk about what happens when we modernize these processes and automate them, and what transformation can bring in terms of ROI and the impact to some of the KPIs like DSO, as Ernie was pointing out. But before I do that, a quick introduction to the company that I belong to. HighRadius is a fintech cloud-based software company founded in 2006, headquartered in Houston, Texas. We are the only company which provides integrated receivables platform, which caters to the credit to cash cycle. We have about 300 plus customers, and we operate in the Fortune 1000 market majorly. Processing about $500 billion of receivables annually with 650 plus employees globally, right? And there's a small representative list of our customers to give a quick introduction to the company. Moving on. So I'm going to talk about the three different dimensions of AR technology ROI. Number one is the adoption of e-invoicing and e-payments. Number two is the improved collaboration for AR processing, collaboration internally, interdepartmental collaboration. We'll also talk about how collaboration with customers can drastically change the way you operate in AR AP. And also talk about how improved customer experience can be brought in using technology. If you look at any technology today, which is related to AR, they're probably siloed and gives only one view of things. So we'll talk about digital collaboration with customers and how that works. So let's start with few of the processes. But before I do that, let's talk about e-invoicing and e-payments and why the adoption is low. So here is some numbers based on a survey done. So if you look at it, when a question was asked on why e-payments adoption is low, 84% of the respondents cited the reason to be it's difficult to persuade suppliers to accept electronic payments, which means that while a company might plan and invest in technology to move to electronic payments, it might not be feasible for the customers to actually onboard or come to a platform because they're probably resistant to change, right? And how do we address that using a platform like an integrated receivables platform is something that we'll talk about. Moving on to the next slide. So let's look at some of the processes, right? So let's look at how invoicing and payments happen today in any organization. So currently this is the status for most of the organization. So on the supplier side, most of the invoicing is either paper-based, email, or if you have a portal, you might want someone to come to your portal and download the invoice. In most of the cases, the invoice is retrieved manually. There is some amount of manual data entry that is needed to be done to get the data out. Archiving of the invoices is a pain. And finally, you actually have to update the ERP on both the AR and the AP side, right? So once an invoice is sent, that invoice has to be entered manually into the customer's ERP on the customer side, on the buyer side, right? Similarly, on the buyer side, they have to flag the invoice for payment. They have to initiate a payment. The payment could be via check or ACH. And then also once a payment happens, that payment information has to be updated in the ERP again, and you have to update the payment status and finally send payment and remittance, right? So there's a whole lot of manual work. So if you can move on to the next slide. There is of course a lot of manual work. There is excessive manual work. It is time consuming. And third, since there's a lot of manual entry, it is error prone, right? So if you look at modernization in this area, the best way to modernize this entire process is to create a supplier buyer network, right? So something like an Uber or a LinkedIn, where, so if you look at Uber, you have the drivers and the ride seekers on the same platform. Similarly, in the LinkedIn, you have the employers and the people looking out for jobs in the same platform, right? Similarly, if you can have the AP and the AR side onto the same platform, and then digitally push invoices and digitally make payments, right? So you're basically collaborating on a single platform. So the value proposition is that if you have most of your customers already onto a network, right? Think of it as a Facebook of the AR AP side. So once they are onto the network, it's easy for you to communicate with them, right? And not just that, you can move one step forward where you're actually creating invoices in their ERP, and you're enabling them to make payments from their ERP, which will automatically update the information in the network, right? So what it does, as we move on to the next slide, of course, the excessive manual work is reduced. So here's an example, right? So if I as an AR person push an invoice through the network will automatically create an invoice in the customer's accounting system. So it is basically eliminating all the subsequent steps, manual steps that used to take a lot of time to create these items in the ERP system. On the next slide, we will see how you can initiate payments directly from the accounting system, which means that you can just clear the payment from your ERP, and that will automatically come on to the network, and it'll automatically update the supplier side as well, right? So what it does in terms of advantage. So if you look at the next slide, it talks about how this whole chain of items that I spoke about in the previous slide is all eliminated. So what happens is in terms of invoicing, you create an invoice. The invoice is electronically pushed directly into your customer's ERP. Let's say they're using QuickBooks, it will automatically go and create an invoice in the customer's ERP, so that you don't have to do manual data entry, archiving, updation of ERP, so on and so forth. And similarly, you don't have to go through the entire step that you take for payments, right? You can just initiate the payment from, let's say you're a customer, you can initiate the payment from your ERP, and that will automatically update the supplier side, which means that the network is taking care of the payments, whether it is check or ECH or credit card payments, and the entire processing is done by the network, and then it's settled on the supplier side automatically. So this entire things happen in a single step. That's about invoicing and payments. Let's look at few other processes where it can help, right? So just to summarize, integrating supplier billing and buyer payment processes. Of course, you have faster invoice delivery because the invoice is directly delivered into the customer's ERP. You have seamless payment from the accounting system of the customer, so there is no need of additional remittances because it is straight through cash posting, right? So the invoice is is directly delivered, and when somebody is paying for the invoice, you already have the remittance information for which invoice it is paid. So you don't need an additional piece of information in the form of an email or a paper which talks about why the payment is being made, right? So it's all collaborated and all integrated in a manner that it takes care of both the billing and the buyer side. So moving on to the next process. So the next process is claims resolution. One of the major headache for, if you look at AR processing today, for companies which are deduction heavy, most of the deductions analysts, while they're called analysts, they spend very less time in analysis. They spend a lot of time in collecting documents, right? So what are those documents? If I have a customer who's taking a short payment today, for that short payment, I as a deduction analyst need to do a resolution or an analysis to be able to tell whether the customer's short payment is valid or invalid. For me to be able to do that, first I need to classify why the deduction has been taken. Number two is that I have to collect backup documentation, and this is not straightforward. A lot of customers, the large customers will want you to go to their portal to download the backup document, the claim copy or the debit memo copy as they call it. Some customers will email you why they have taken a short payment. Some customers do not send any information, right? Some customers will send an EDI file. So the collection of backup document from customers itself is a cumbersome process. Number two is that deduction as a process involves a lot of departments, right? So there's a short payment because the customer claims there's a short delivery, right? Which means that the goods were not delivered in full. Now I have to reach out to my warehouse to confirm whether the customer's claim is correct or not, right? So that's interdepartmental collaboration. So you have to talk to your customers, you have to talk to your internal teams, and that takes a lot of time in email collaboration to make sure that you're getting the right information to do the research. So that's collections of backup. And finally, you have to identify the backup documents and then link them to the deduction in the ERP system, right? So the majority of the time is actually lost in collecting these documents and classifying the documents. What does it lead to? It leads to, of course, disgruntled customers, and it also leads to high DDO, the days deductions outstanding, which means that you have large number of deductions which are pending on your side for resolution. That also in terms impacts your DSO because you're not getting the payment back from the customer. So you're spending very less time on research and communicating the resolution to the customer. Next slide, please. Now, what's the new frontier for claims resolution? You can have a single integrated platform which will automatically collaborate with your customers and your internal teams. How will it do that? It can automatically log into customer's portal, download the claim information. It can read emails automatically so that you don't have to go through emails to find the claim information. The platform is doing it for you. It can read EDI files, and then it is also intelligent enough to figure out which deduction and which deduction backup match. So the matchmaking is also done by the platform. So what that means is that the whole portion that you see on the green on the left is something that is redundant. You don't have to do anything on that, and the system or the integrated platform is taking care of it. And you are actually doing the work of an analyst, which is research. All right, so you're not doing any clerical or manual work where you're reaching out a lot of people to kind of collaborate and get the information. Now, once you do that, the communication of resolution can also be done by the system automatically. So which means that if a deduction is found to be invalid, you have to communicate the invalid deduction resolution to the customer, right? That can be automatically done by the system. So all you're doing is research, and that should be the primary focus of any AR analyst or deduction analyst. And all the redundant manual activity can actually be done by the team, right? Just to give you an example on the next slide. Here is a case of a deduction that has come in, right? So once a deduction is come in, the system should be automatically able to read. So here, if you look at the example on the right hand side, it is actually an EDI file that the customer has sent. The system was able to read the information and it has automatically provided the reason code as you see it. So the customer has taken, now when a customer takes a deduction, the reason code that they specify need not necessarily be something that your ERP can understand, right? So which means that they will use their own terminology of why they have taken a deduction. So you see the reason code here says A906F1. This is something that your ERP may or may not understand. Now this can also be handled by an integrated platform. So if you go to the next slide, as you see, this has been appropriately coded to the right reason code, which your system can understand. And then all this information can then flow back to an ERP, and then it can automatically link to the right deduction. Right? So this is the way that the system can handle this entire piece without you getting to work on these deductions and the manual piece of deduction resolution, and you can really focus on the actual research on deduction. So that's the second process where it can help. Now the third big headache that we see today with, and this is primarily within the cash application space, is that a lot of customers, and if you have a large number of small and medium customers, this is pretty prevalent. A lot of customers do not send remittance or the payment information or the payment advice of why they have made a payment. Right? It's a big headache for a cash application analyst to figure out why the payment has come in. Right? So what happens today? A cash application analyst first identifies that the remittance is missing. Then the analyst will notify a collector. In most of the cases, the collector will reach out to the customer, right? Because a cash app analyst may or may not reach out to the customer directly, depending on the company, this varies. But most of the time, it's the collector that reaches out to the customer. The customer, of course, it's not as straightforward as you reach out to the customer and they provide the information. It might take multiple calls to be able to find the customers, to be able to tell them that you need the remittance information, and then follow-ups so that they can actually share the remittance. And once you get that information is then used by the cash application analyst to apply cash. Now what happens in the entire process is that if you have a lot of customers who are not sending you the remittance information, the payment application gets delayed, right? And it has a direct impact to your DSO and your working capital, right? So this is something which is a major headache. Now how can we resolve that? Let's look at that in the next slide. You can actually build a solution which is touchless, which means that neither your cash application analyst nor your collector needs to get involved. Of course, your customer needs to get involved at some point, but there's no need of multiple follow-ups with your customer. Now, how that will happen? The system will automatically identify that there is a missing remittance. The platform will send out an automated email to the customer. Now, we said this is not a one-way email that you send to a customer. We talked about improving customer collaboration. These emails are all enabled by campaign management, right? Which means that you can track what happens to the email, whether the customer has received the email, whether they have clicked on it, opened it, downloaded the information, clicked on a link that you have provided. All of that can be tracked, right? And finally, that email will be something where your customer can look at the list of their open invoices and then tell you which invoices that they have made payment for, and then submit, which means that this will automatically create a remittance for the missing remittance scenario in your ERP, right? So you don't have to follow up, right? So let's look at some slides as to how that works. On the next slide, yeah. So this is an email now which will automatically be sent out to all the customers where they've made a payment and there's no remittance. And as you see, it will ask them to come onto the portal. It could be the same portal as I talked about where there's a digital collaboration between your AR and AP side. Now, once they click on it and they land on the portal, as we go to the next slide, they will be able to see all their open invoices, right? And they can select what amount they have paid for which invoice and submit, which means that you are actually asking your customer to create a remittance as a self-service, right? Instead of waiting for them to send out remittance and multiple follow-ups, right? Next slide, please. So the next scenario that we are going to talk about is what happens to an order blocking process, right? Which means that It's very typical to all companies where you have stricter credit limits and there's a credit process. So the order getting blocked is a very common scenario. Now, most of the order blocking scenario is handled reactively. Now, what does that mean? First, an order gets blocked because a customer has exceeded the credit limit. And then a collections team or somebody from within the credit team reaches out to the customer. That's almost like a dunning process. Now, when you reach out to the customer either pays or the customer promises to pay. Now, if the customer pays, the cash application team needs to get involved. The cash has to be applied. Once the cash is applied, a notification goes to the credit limit, the credit team, and the credit team goes and then releases the order manually. Similarly, if the customer promises to pay, a notification goes to the credit team and the order is released manually. Now, in the order release process, it can also happen that you might have a bunch of approvals and workflows that's needed, which means that, depending on the amount of the order that you have to release, you might have to go to different levels to take approvals, right? Now, the entire process is reactive. Now, all of these things happen once an order gets blocked, right? So which means that you're still waiting for the order to get blocked to initiate all of these. Now, let's look at how modernization can change this scenario. If you're using a platform which is artificially intelligent, the artificially intelligent engine can predict right at the time of an order creation that this order has X percentage chance of getting blocked, which means that it can say, once the order is created, it can say, okay, this order has 90% chance of getting blocked. Now, this is based on historical data in the system. It takes the data of the credit limit of the customer, the credit exposure, the credit horizon, and so on and so forth. Now, based on the data, it can predict. Now, you can tell the system to send out automated correspondence if the percentage prediction is high, which means that if the percentage prediction is 90% and above, system will automatically send out an automated correspondence to the customer. Now, the customer can, as I showed in the previous slide, once this correspondence is sent, you can actually track the correspondence. The customer can click a link and do a self-service to either pay or promise to pay. And once they pay or promise to pay, since it's an integrated platform, the cash is also auto-applied. So you don't need a cash application analyst to apply cash. And all of these will automatically go and free up the credit limit of that particular customer. And it will then go and poke the order release process to release the order automatically. Which means that all of this can happen without an order actually getting blocked, right? So which means that you don't have your sales team on your head screaming to release an order, and you're not impacting your sales process. Instead, you're actually doing stuff which is much more proactive, and you're asking the team to do much more research-oriented, analysis-oriented work, right? So this can be handled by the system automatically, in the back end. Moving on to the next slide. Can we go to the next slide, please? Hello.
Yes, you should be seeing the Tyson case study slide.
Okay. Now let's look at an example of Tyson. This is the blocked order process before they actually did some automation. So they had a customer order management system, and in the order management system, once an order is received, the order actually qualified for a credit check within 3 days of shipment. So till it reaches 3 days of shipment, the order was not qualifying for a credit check. Now, once it qualifies, the system, it goes out of the customer order management system, and then the credit representative will manually check whether the credit is available or not. They'll also reach out to different entities to look for the customer financials, right? It could be publicly available financials, or it could be credit agencies to get the data. And the credit limit and the open AR is basically used to calculate the exposure, and based on that, it checks whether the credit is available or not, right? So the credit portal was not integrated with the ERP system, and in between the credit portal and the ERP system, there are also a bunch of manual activities done by the credit rep. For example, logging into a credit agency and downloading that information is a manual work, right? Neither the customer order management system nor the credit management system was capable of handling it. Now, once an integrated platform was implemented, which we see in the next slide, this entire process became much more seamless, right? So what happened to the process? The sales and distribution, of course, once the order was received, there was a workflow for credit failure, and the system was automatically able to check with the credit system whether the credit is available or not. And the credit system was directly integrated to external entities like the credit agencies and the insurance agencies, and the customer financials were automatically gathered from the public financials companies. The credit limit was used to check the credits, and finally, the credit check whether the credit is available or not was done on a click of a button. So this was a huge savings to Tyson. So if you look at the next slide, the overall statistics today, their credit reviews improved by 15%. They were not able to review most of their customers. It improved by 15%. The customer master consolidation almost decreased by 92.7%. The number of customers they onboarded was about 1,000 more than the previous year, right? And the order deliveries that used to get blocked reduced by 2.5%, right? So and this of course has a bottom line impact to the bad debt reduction, and also the DSO and the working capital. So with that, I conclude my part. To talk about the key components of value proposition, I'll probably hand it over back again to Ernie.
Thank you very much, Karan, for that fantastic comment. It's amazing to me how much the technology has shifted even in the past 5 to 10 years. So in terms of the key components of the value proposition, just improves the productivity of the process, automates redundant manual tasks, improves team productivity, and focus on critical tasks. We talked about this a lot. So in making the case for AR automation, you really want to make sure that you include the increased productivity of your team, spending time on improving the customer experience, lowering that DSO, connect all processes across credit to cash. Again, eliminate the lost time and manual coordination. We talked about the document and information exchange issues that often occur. We can eliminate those so people are really focused less on resolving potential issues. You can share that intelligence across your team, and again, it enables seamless collaboration with your customer, which is key. Fast receivables tracking, you can keep your customer in the loop. A few more strategic outcomes of AR automation. Just want to help everyone be able to easily define the business case for AR automation, reduces bad debt and DSO, free up allocation of those cash application resources to high value activities, immediate and efficiency gains, again, eliminating clerical data tasks across HR. You minimize that bad debt experience across customer base. With the proactive credit management process, you start to identify issues before they occur. You eliminate trade deduction, backlog, make that cash automation process more efficient, and then you just improve collections effectiveness, get paid faster, and really optimize that working capital. So a key takeaway, which I think is great if you're gonna print out a few of the slides, a credit management checklist. You want to have a plan, provide accurate and timely information to your customers. Again, create that symmetry of information, develop your KPIs, define your roles and responsibilities internally, facilitate a culture of collaboration, standardize communication processes and messaging, create great documentation, centralize your data and communication. You want to score customers against cost of credit. Talked about this a lot, Kieran, especially be proactive, focus on key accounts, EIPP is key. You want to keep your customer financial information up to date. You want to engage your sales team. You want to identify and escalate trouble accounts. Again, be proactive and work as a team with the AP teams at your customer. Also want to offer a few additional resources which are incredibly compelling, a few white papers from the HighRadius website. HighRadius has some great thought leadership resources, have some great resources on Treasury Careers as well. The majority of our questions in the Q&A are really technical, so I will go ahead and choose to take those offline to Kieran. And with that, I would like to once again thank our sponsor, HighRadius. We appreciate and share their commitment to thought leadership. And finally, thank you very much to you, the audience, for your valuable time. Make the rest of your day great.